Ladies and gentlemen, welcome to the Fintech Frenzy. We have so much to talk about. I'm going to try to get through as much as possible. There's some other things that if I don't get around to, I'm going to make separate videos on them as well, because some of these topics, although we're going to touch on them, sort of on a surface level basis, there is so much deeper than that. For example, Robinhood Investor Day. I went to the actual event in New York City. Ton of fun. Got to see Vlad again. Got to meet Amit in person, Roy in person. I've done that before, but then also have met the great and powerful Steven Fiorillo. So that was a lot of fun. Also spent like a decent amount of time with Vincent Daniels, which was just like a crazy experience walking around New York with him, talking to a hedge fund manager. That's going to be a time that I look back on my life thinking like, how the heck did I get here? But yeah, a lot of fun, and also a couple of investors that have been quite short SoFi for some time. Vincent Daniel, I mean, so yeah. Oh no, he was on time. The market's gonna flip. Yeah. Did you see Shift4's CEO letter? Of course. I was sitting in SoFi's Investor Day, and Amit like taps me on the shoulder. He points his phone to me, and I was like, "Man, if you can name a black swan event, like that is what a black swan event means. Like an event that can affect your company that is 100% unanticipated. Like you cannot have anticipated that coming out. I mean, yes, he's into space, but that doesn't mean that Trump has his eyes on him as, heading up NASA. Like crazy. But these things happen. Black Swan event does not mean bad. Okay? Black Swan just means completely not not able to go in. I have some opinions on whether I think it's good or bad. I mean, to be honest, I am extremely founder driven. Like I like companies that are founder driven. This does impact this. Taylor Lauber, I mean, sure, great. Like has been at the company forever. He speaks at some fireside chats. He's extremely ambitious, talks very much like Jared Isaacman does, but he's not Jared Isaacman. Okay. And even if he is, it was great that there was two of them. Okay. And there's also some opinions I have about whether or not that this is temporary. I don't know. We can talk about that later on in the show, but there's so much stuff. SoFi had so much news on the day that I was gone. There's some PayPal stuff I want to talk about. We never even really got around to talking about Black Friday, Cyber Monday stuff with, Shopify, PayPal, Adyen, all of these companies showing great statistics. Yeah, we have a lot to talk about. Why the slight pullback on SoFi? I didn't see any news that would generally bring that out. I mean, there was a large investor, so Silver Lake actually sold out of SoFi completely. There was a large block trade that people saw, and then we were wondering what it was about, and it actually came out. Data-driven investing showed this on the SEC filings here. Let me see if I can go to the SEC filings real quick, and then I'll just show this here. Yeah, there are gray swan events as well, where it's half seen as, being able to be spotted, and then there's black swan events. But you really only hear about those because those are the ones that really impact things happening. Matt Flo, good to see you, brother. You made it to the live. Okay, so Silver Lake here on December 2nd ended up selling quite the portion of SoFi stock, and in fact sold out of SoFi stock over just a little period of time here. 2 days, 3 days, dumping out of every single share that they have. Sucks to see them go, but it's also all right. There'll be old investors and new. This is what investing is about. You're looking for opportunities, and potentially, if they do have their eyes on another, private company that they want to take public, this is another thing too. There are a lot of investors that like a certain stage of investment. And so they don't want to stick around. This is very much why SoftBank ended up leaving so early on. It's just not what they want to do. They don't want to hold on to these public companies. They want to find tiny venture companies and watch them build into those great positions. And so SoFi is hitting a different phase. Now, that doesn't mean that they're maturing and out of growth phases, but it might not be the risk reward that they're looking for anymore. And that's perfectly fine. They held through the darkest times, which showed that obviously they saw more in this company than what, a potential David Chiavrini sees in this company. If anyone's catching up on the SoFi news, you'll know that we're definitely going to talk about him later, because he actually did end up coming out and talking about SoFi once again, but it didn't seem like he wanted to talk for very long, although having roughly a 7-minute conversation across his entire portfolio, he's only saying one is an underperform. He's pretty much going long or bullish on every other stock that he covers except for SoFi. There's only one that he thinks will have negative performance. Now, he's said that since SoFi was at $4.40, that it was going to be a sell. His price target was at $2.50. So doesn't mean that he's right. In fact, whenever I can just go to that right now, by the way. Let me just find. So I have the original video. However, he starts talking about SoFi midway through. So we'll get that up here. And also, my computer is so slow. I don't know what's happened. I have ordered some parts and cannot wait till they get in. So, but that should be like today or tomorrow. All right. Because I swear my ability to click through my computer is much faster than my computer's actual ability to let me get there. All right. These were some of David Chiavrini's comments about SoFi recently.
David, another name I want to get your take on, because you only have one underperform in your coverage universe, David. It's just one lonely cell sitting there, and that is SoFi, which has enjoyed, it's a nice move this year. It's up around 60%. Why do you remain bearish on SoFi, David?
Yeah, so SoFi, that's our paired trade with Lending Club, and Lending Club has actually outperformed SoFi when you look at the year-to-date figures. So when you look
right now, that is true. Okay, and by the way, he increased his price target $5. It was $4 before, so that's even funny as well. I guess he still is seeing fundamental improvements in the company, but that being said, Lending Club on a year-to-date basis is outperforming SoFi. It's just funny how he gets to pick and choose what metric that he actually wants to cover Lending Club beating out SoFi. But by the way, we're going to continue. Like he said, this was a pair trade, which means he's going long one stock and short the other. Okay? Both had great results year to date, which means this pair trade was essentially a neutral event year to date, where you would only be up just slightly because you would be negative on your SoFi short position because it also ran up 60%. Okay.
Look at the business model of SoFi versus Lending Club. They're actually quite similar in terms of the FICO range that they are targeting for borrowers, and the credit quality has been similar. But when you look at the valuation discrepancy between Lending Club and SoFi, it's too wide to ignore. So that's when I keep the underperform on SoFi and keep the outperform on Lending Club. But I'll give SoFi credit that they have been right in the sweet.
It's funny how he says that. Outperform on Lending Club, underperform on SoFi. As if SoFi is going to increase, but not as much as the market. But that's actually not what he's betting on. So the problem is that there's sort of 5 ratings that he can place this on, right? So like neutral, like perform, outperform, underperform, So he placed at the lowest rung that he could possibly go, which might let people assume that what he's betting on is just SoFi having slow growth next year. But that's not what he's assuming. He has a $5 price target. So what he's saying is that this company is going to get essentially a 66% plus haircut in their stock price and just absolutely get diminished or demolished, right? He wants to like cut this company by a third, or sorry, 2/3. He wants to only have it by a third.
Sweet spot of this kind of fintech rebound that we've seen this year, and they've been benefiting. But if it weren't for their valuation discrepancy with Lending Club, we would be more favorable towards SoFi.
David,
And legitimately, I actually do appreciate that part of the commentary. Some people were just a little bit meaner there. I do like the fact that, you know, he doesn't see anything wrong with SoFi necessarily. He just has a hard time seeing the valuation. Now, if you are a die-hard valuation type guy, banking analyst, we've seen this time and time again. They are looking at the tangible book value, and they can't seem to step past anywhere after that to value the tech company or anything like this. So at least I can justify, or I can see how he justifies his analysis of the company, even though I believe it's wrong. Okay. That being said, what his other comments about saying that it's underperforming Lending Club completely goes against what his actual pair trade was, which was to short SoFi, which you would be in massive negatives for doing. Okay. And by the way, thanks to Data-Driven Investing for going back and actually finding the original report. So whenever he initially put on this pair trade between Lending Club and SoFi was on May 15th, 2023. Okay. Lending Club was $7.44 at the time, and SoFi was $4.77. If you were to have done $1,000 into each, according to Data-Driven Investing, to buy $1,000 of Lending Club and to short $1,000 position of SoFi, you would have been up on Lending Club. Your $1,000 would be worth $2,116, or up 112% gain. However, your SoFi short position would be down 233%, or negative $3,329. And by the way, Data-Driven Investing did not include, at least I'm assuming here, that he did not include borrowing costs for actually shorting the actual company. Right? To short a company costs money over time. So you'd be stuck in this trade for an extremely long time. He's still holding that pair trade position, still holding it up. And yet you would have overall, betting on these two companies that have had massive 100% gains, you would have lost more than your overall, or sorry, not overall amount. You would have put in $2,000, you would have lost $1,213. Massive, massive losses there. You'd be walking away with $800 out of your $2,000. And if you would have just went long both companies, you would have had, you know, $5,400 instead. So absolute silly trade. But, you know, he can go on and justify it. The truth is, like, it's so funny. You know, David Triavrini's portfolio looks great just because he's been long every company except for SoFi. If you would have just went bullish on every single position, it would have worked out in bull markets. And this is why, you know, what indexes do so well. It's like in overall economies, every business is going to do well. Sometimes it's okay to just bet on the American economy. This is why I don't short. It's honestly just a terrible business and probably only designed for picking out scam companies, in my opinion, not ones that you think will underperform. I think that that's a, you know, like, I don't like the valuation of Palantir. Okay. I'm not shorting it. Like, it's just a fool's errand. And smarter people than me will make money doing stuff like this, but still, it's a massive hit. And to do this on two similar companies of the same industry was just taking what you assumed was a hedge and just destroying your own portfolio, you know, into negatives whenever you pick two winners. That's crazy. All right. Let's quickly go and talk about something that we already brought up at the beginning, which was here. I'll bring up these two things here. So Shift 4 holders, we were all very happy. Shift 4 was hitting new highs. I think it got to $116 plus on Wednesday before we actually came crashing down due to Donald Trump's tweet here. Let me show you. I am delighted to nominate who? Jared Isaacman, an accomplished business leader, philanthropist, leader, astronaut, and administrator of the National Aerospace and Aeronautics and Space Administration, NASA. So, over the past 25 years, as the founder and CEO of Shift4, Jared has demonstrated exceptional leadership, building a trailblazing global financial technology company, and has also co-founded several other companies. All right? Cool. Love it. Is Jared Isaacman going to do this part-time? What's his thoughts? So let's go ahead and just take a quick look. Jared Isaacman's exception of nomination as the NASA administrator. To my Shift4 family, after nearly 26 years leading Shift4, the time has come for me to embark on a new journey. I was nominated to lead NASA, a role that reflects my passion for advancing humankind's reach among the stars, unlocking the secrets of the universe, and improving life on Earth along the way. Now, he does say that, Taylor Lauber's been here forever, loves the guy. He thinks that he's going to continue to push this team forward. He has full, belief in him. Legitimately, I've read a lot of these stepping down emails. 100% of the time they include that, okay? Regardless if it goes well or not. That being said, Shift4 is well positioned for the future. I agree. Our strategy to win across restaurant, hotels, stadiums, and e-commerce and to do well worldwide is stronger than ever. I also agree. With a solid financial foundation, low leverage, and an impressive pipeline of opportunities, Shift4 is positioned to deliver exceptional growth for years to come. I intend to remain as CEO until my confirmation and will be fully engaged at our Investor Day in February, where we will share our vision to deliver profitable growth well into the future. I also plan to retain the majority of my equity interest in Shift4. That's very bullish, right? If you didn't believe in Taylor, you wouldn't be doing that. Subject to ethics obligations, and will move quickly to reduce my voting power to commensurate with other Class A shareholders. While I can envision a future where I return, I know this company is in great hands. So this is really what I wanted to talk about today as well. While I envision a future where I will return, I know this company is in good hands. I don't know if he's returning. Okay, 26 years. 26 years. During that time, he has gone off the beaten path and started other companies, has gone into other things like, being a pilot, being an astronaut, doing all of these interesting things. And I honestly think, just like very many of these other billionaires like Jeff Bezos, or it would be like the same equivalent of Jeff Bezos returning from Blue Origin and then going back to Amazon. While that company is thriving, while that company's in other hands, I do not think he's going to come back. I could be wrong, right? If maybe I think the difference is this truly is his baby. He's been here since 16. I could even see him playing small roles, still trying to step in, almost like Larry Page or something like this, where they come back during times of need to save Google. Maybe that's the case, but it's hard for me to envision that he wants to stick around in this e-commerce company. While I think that they are doing great things, it's kind of a playbook that he's played out already. And I think that he's looking for new challenges. He's definitely an extremely ambitious type, looking for adventure in business. And he'll probably end up doing something even after NASA. And it probably is with space, or potentially, having some branch of off of SpaceX, because obviously they're very close, Elon Musk and Jared Isaacman. And honestly, Elon Musk probably handpicked Jared Isaacman, and that's why Donald Trump had picked him. That is my own just guess, belief. Not there's no hidden emails or something like this. I just know how close they are. They've had a very close relationship, Elon and Shift4. And now, obviously, he's heading NASA. All right. Now, in terms of my shares, I did not buy this dip. I I don't think I'm going to buy this dip because I don't think it's going to dip too low. You're not going to see this in, low 90s or 80s or something like this where I would continue to acquire. But I am holding. I'm not buying right now, but I can wait till Investor Day, right? I think that's probably a prudent thing. They actually just announced the Memphis Grizzlies are actually partnering with Shift4, so they're still landing customers. Obviously, it's not like Jared's making these types of decisions. I just think that some of the real financial discipline is really where I look to Jared and say, like, okay, they've made all of these decisions to continuously be profitable, to not go above and beyond, to not try to make bets that are too costly, that or too much margin, or try to bet too big on large acquisitions. And I know that Jared Isaacman has the overall great health of this company over the long term nailed down in his brain. Okay. Well, Taylor's been there for a long time. He may have a different approach to what he thinks is the way to sort of handle this business. So we'll see. Would you rather buy more SoFi or Hood? I'm half and half. I mean, at these prices. So I did recently say, I guess some people follow me on Twitter that don't watch the Fintech Frenzies. I did actually tweet that I bought more SoFi, and people were like, Tanner, I thought you weren't buying. Someone had donated to me. Actually, a few people had donated to me and said, hey, I'm donating this money to you, but you have to buy SoFi with it. So I bought SoFi. I wouldn't have bought SoFi to at these prices due to the size of my own portfolio in SoFi. Like, my position in SoFi is big enough right now that I don't need to continue to build that position. I'm happy with it. If SoFi 10x's, I'll be happy knowing that I didn't double down at 16 or something like this, right? Like, I'm fine. Now, Robinhood, however, this has been the greatest benefit to me of going to New York, going to Miami to see them, getting to talk with Vlad so many times, is that you really get to understand this company. If I got to see an investor day from some of these other businesses, you'd get to have a better understanding of how they see the company. Because obviously, whenever you're looking at quarterly numbers, you can kind of get an understanding for businesses. And as much as I tried to learn SoFi as much as possible, I'm always learning more, especially whenever I talk to people that are close to the business. So I really wish and I pray that there are some sort of doors that start to get opened to more analyst discussions, more retail involvement into this company, just more coverage into SoFi. Because without extra investor days, fireside chats, these conferences or product events where you're inviting people to go actually try these products and, meet with the team and see the culture, people get to make assumptions that potentially might be misguided, right? I have less and less assumptions about Robinhood as I go and actually talk to the people who are actually building it. And then my assumptions either get corrected into I was wrong, or I'm 100% right, and it's doubling down on the bullishness that I believe in this company. So I just pray for that. That would be a very exciting time for me as an investor if more of these companies open themselves up to retail analysts. And I think you really get to see from Robinhood, and they've done these approaches all the time. They are very forward whenever they make their decisions, right? They're getting super deep into cryptocurrency. They're talking about, tokenization of real world assets. They've been talking about this for years, right? They are front running all of these decisions before they actually happen. And that's what you want from a growth company. But that being said, SoFi is seemingly hesitant to want to open up to more conversations with retail. Like I said, they haven't even been on the channel yet. They don't see a reason for doing that. They want to go on the big shows because those places have proven themselves, and I understand that. But also for me, it's hard for Like I'm no arbiter of these companies. Like they don't have to give me that. But for my own portfolios, it does make it less transparent if I can't get in there. So for my own portfolio, I'm just being selfish and saying, hey, I'd love an invite. But yeah. And it is a good time. It's like a time of companies that are actually getting back into doing investor days. Robinhood's, if you guys didn't see, I'm going to do a full video on it, but it's going to take me a while to break down the parts that I want to talk about, because obviously there were so many highlights that at this point it's like, okay, do I just want to like just go watch the investor day? But it was great to see their insight into this company, how employees talk about Vlad, how they deal with the work, like the work culture, the people who are doing these events, the talking to the engineers that are actually building the products. It's insane. So, yeah. SoFi has been hoping that the numbers speak for themselves. Yeah, but honestly, that is not good enough. That's not good enough. There's a ton of companies that do well. That's like saying Nubank's numbers should speak for themselves. Nubank's numbers are way better than SoFi's numbers. Nubank's numbers should speak for themselves. Robinhood's numbers should speak for themselves. Their margins are insane. So whenever you're comparing SoFi to incumbent banks, their numbers look great. Whenever you compare SoFi's numbers to hypergrowth companies, or when you start getting into companies with insanely high valuations that have growth, numbers don't speak for themselves anymore. So you kind of have to continue to add more and more information. Does NVIDIA's numbers speak for themselves, or do people still want a lot more clarity from them, from conferences and investor days and all sorts of things that they have to do to close those gaps so then they can get a premium valuation? SoFi should do an investor day next year. I hope it's part of the pipeline. Yeah, me too. I really do hope it's part of the pipeline. And that's honestly what they may be wanting to wait for, right? You probably don't want to schedule an investor day in a transitional year. You probably want to do it in 2025. And I'm also thinking that potentially is what they want to do in 2025 in terms of doing more fireside chats and doing more media. It's seemingly what Anthony Noto tends to do, which is obviously he does want the stock to go up. That's his fiduciary duty. He wants to hit his $25, $35, and $45 price ranges by mid 2026. I think that he wants all the good stuff to happen all in the same time, so then they can actually break those targets. If they just get small bits of news incrementally, then you can kind of just flatline the stock. And that sounds like not fundamental analysis. That sounds almost like almost like TA with the momentum trading and stuff, but that really is the case. That does happen. You have to let people's minds run wild. It's not like Palantir eventually hit this point where the business has changed so drastically that the stock is 10x. No, it's just, you're sort of telling a different story to the investors, and they can envision why it would go up further or why they would have higher guidance going further. Like the investors that are looking at SoFi, the analysts that are looking at SoFi are saying, hey, they're saying 55 to 80 cents of EPS, and we think it's going to come in at 47. It's below their low point of 2026 guidance. So they can't see the vision that SoFi is seeing. Well, then clearly you're going to need to give us more transparency into how you get there. Doesn't that make sense? The most bullish person at Robinhood's Investor Day was Devin Ryan. Okay. He has been, and by the way, he's a top 25 analyst on Wall Street out of the 7,000 analysts across the entire industry. I think he's top 23 or something like this. And he covers Robinhood as one of his companies that he talks about. And for the longest time, even whenever Robinhood was at like $8, he had a $25 price target. He was like double the next highest person. He stuck to his guns. And then as Robinhood started to ramp up, he had changed his price from 25 to 40. Well, the other day, whenever we were in New York City, after the investor day, Robinhood passed $40 a share. So we were like, okay, well, Evan's okay with giving a price target that is, much further than where the stock is, and he hasn't changed his price. Does he actually think that the real price is $40 a share? Up until today, that was the truth. And then after the investor day, he went back to his team and said, hey, let's model all this out. Like, they want to go heavy into event contracts. They think that what they're going to do with options, they're going to do with futures. They think, they are not only going to just get into active trading, but advisory is going to be another, tripling of their total addressable market. Like, there were so many things that were massive multipliers onto their business at essentially no more variable cost. And yet, well, I mean, of course, variable cost. Maybe I should have said no more fixed cost. But that being said, what I think is very interesting about that is that Devin Ryan, after the investor day, with more transparency, came out with a $53 price target. Now, I know what a lot of people say. Yes, of course, Roy, 100%. Here, let me... Sorry, you're lucky I actually just looked down at the actual thing. I barely look at it when I'm on these rants. But here. There you go, brother. But that being said, if you give people more transparency, and although analysts, opinions are not 100% like their word is not gospel, it doesn't mean that they don't impact investors' opinions of the stocks. My dad, who is not a big stock guy, but he's an investor, he's got assets. He always tells me, oh, well, the price targets on this company are this. I'm like, yeah, but those people's opinions are the same as my opinion. Maybe more educated, more information, but it's just someone's opinion. It's not gospel. But still, it does influence people's opinions that potentially might not be as into it as people like myself or Roy Crossroads. How you doing, Roy?
Good. Nice hat, by the way.
Thank you. I like your hat. I'm sad that I didn't get a second one.
Yeah, it would have been nice other than that. Like, the water bottle's nice, but another hat, that'd be good.
I didn't even take it. Did you take it? I didn't take
it. I took a water bottle. I'm going to give it to Matt Money here. He doesn't know yet. Hopefully he's not watching this, but I figured he'd like it. So.
He watches.
Oh, yeah. Matt, you don't know.
Yeah. So, what do you think about Robinhood's Investor Day? I'm assuming that's what you wanted to speak on.
Oh, yeah. I heard you talking about it. I just finished making a video. Not on that. I need to at some point. Blown away. Like, quality of the event, like what they managed to focus in on. Like, they could have talked about anything there. There was beyond the vision. Like, the vision's awesome. The TAM's awesome. I'm not like purely a TAM investor just because, I mean, like, almost every company out there can be like, oh, look how big the TAM is, and never have a chance to reach it. But we've seen, from this event, from Miami, and from throughout the year, like, they have a phenomenal culture. Almost every single thing that they launch is very, very successful. We heard some good notes from credit cards, which is probably the biggest worry. The UK has probably been their weakest launch, and then they address it. They talked about what they're doing with that. Just some notes on that, and then with Jason, the CFO, like, coming in and just saying, like, it's not, basically they get the impression with cutting back that 1% everything match. They're like, hey, if a promotion isn't working, we're not afraid to just say, hey, we got it wrong, we're backing away, or we're making tweaks. That's a sign of a strong organization that isn't afraid, because they're willing to take risks. And if those aren't paying out, they're willing to say, okay, you know what, we're not going that direction after all. And so, like, with the level of execution, with that caution that's kind of built in there, they're going for it, but it's not like the crazed 2020, 2021 revenue and growth at all cost. We don't care if it like puts us in a hole, if it burns money, like whatever. They're not in that mode at all. I'm super excited to see what they do, Lord. Tomorrow, I mean.
There was a lot of comments from Robinhood regarding their strategy, and one of them caught me. Well, I knew it, but hearing it from the horse's mouth was a lot different. And what they said was, we want to go wider before we go deeper. And a lot of companies hate that strategy.
Yes.
Nubank has been adamant that they do not want to go wider before they go deeper. They want to go so deep that they want to grab every single Brazilian, customer before potentially getting into Argentina. Where then you see other companies like Revolut that is in 35, 36 different countries and has small bits of it.
Mhm.
And it's seemingly that Robinhood is replicating the Revolut strategy as they're now talking about getting into, so many different product lines, but also trying to go after many different geographies as well. They announced Singapore. I bet you very close after this, you're going to see UAE, Hong Kong, these sort of English American financial hubs in these different areas.
Yeah, I think UAE is likely or somewhere in that region. And they are thinking of Singapore as a regional hub, so maybe not Hong Kong. We'll have to kind of see, but no, there's a lot of TAM out there. They know how to execute at it, and it seems like that strategy is that they know like they'll be able to skim off the top like real easy when they deploy there with their existing products, and as they gain name recognition, as people see that they're differentiated, as there's trust built, because a lot of these places, some of these places, not Singapore, they just don't have anything like Robinhood. So people don't realize what they're missing out on until they have friends that are like, hey, look what I can do. Look at what I've done. So yeah, it's a neat strategy. I think that it's going to work out for them. Yeah, it's not wrong to go deeper before wide, but for Robinhood, I think it's the right strategy.
Yeah, and I wanted to talk really quick on like total addressable markets, because what I think is more important is more of a SAM, or serviceable addressable market.
Yeah.
Whenever Robinhood talks about financial services being their TAM, I don't really care, because like you can say mortgages is part of your TAM and it's not even remotely close. So really, whenever I saw that slide, I was looking at active trader market in the US and I was going, wow, that's very large. They have a real opportunity to take a good percentage of that market, which is still even big enough. And by the way, one thing that people do not take into account very often is what a disruptor can do to the size of those markets, right? Look at what they did to options. Right now, it might be 20 billion TAM or revenue TAM for Robinhood. By the time Robinhood has those people in their ecosystem, maybe that's a $60 billion TAM.
And they can do that with element after element. So like options trading for retail was very rare. You almost never heard of it. I don't know if futures will have the same thing happen to them. Maybe, like that's a possibility. But I know like some people have said, oh, you're going into the UK, but like no one really uses options over there. Well, I don't think that they have the platforms that really give them the tools. And, it probably will be less in the United States, almost for sure. But I think that as they enter that market, there's a lot of room to grow. When they launch options, of course, they have to launch SIPs and ISAs next year too.
Yeah. Advisories coming out. They said that I just don't know. I'm not as bullish. Obviously, they're very bullish on the advisory side. But they said that they were going to make a splash in advisory the same way that they made a splash in self-directed. And I don't know if that could ever be replicated. Like that would if you think the way Robinhood made a name for themselves, they were the company in financial services whenever self-directed was coming out, because commission-free was not a thing. So how do they replicate that in advisory? That doesn't even make sense to me.
Yeah, I mean, it feels like that they're trying to, diversify, actually diversify, not just, we have 9 different products that have a $100 million annual run rate. And so as they're actually able to add that advisory, that's maybe what gets those retirement folks to stick around after those 3% match incentives, after 2 years, when they can actually withdraw their funds, or depending on that, on when they actually entered and what they did on that time, that they'll stick around for that, because, they're used to that level of service. They'll have that there. So it feels a little bit defensive in that way. And also that they're going after that TAM that they've basically not touched of a different style of investor. Like they've killed it in the active trader market, but there's other people out there as well. And so they're they're building some of their products, including this, to reach that. I don't think that they're going to dominate it like they do active traders, because that's what they're known for. But time will tell.
I covered Shift 4 earlier, my opinions of Jared Isaacman getting nominated for the NASA administrator. I think you found out about that news when I did.
Yeah.
Let me ask you how important the founder is in this play. We just went to the New York City event for Robinhood. What if somehow Vlad Tenev was selected for a role and he stepped away temporarily from Robinhood? What would you do with your shares at Robinhood?
Ooh, I might take some off the table, to be honest. In Robinhood, like I've seen the culture, and there's some fantastic folks there, but Vlad is kind of a unicorn when it comes to that vision and that level of intensity. Like they mentioned it, like that, they've gone for the 24/5 market or 22/5 or whatever. And like Vlad is 24/7. Like he beats the market. He's just always going. And I mean, we saw that in action. Like that's who he is. And he sets that pace for the entire company. It's embedded in every single thing that they do.
You're standing there. They did a panel and everyone is there at that stage of being in their C-suite because they're extremely hard workers. They have sacrificed personal events and social events to work hard and further themselves in their careers. And all of them said, we cannot keep up with this guy right here. This guy works way too much. Vlad.
Yeah, like that product launch, the elections, the event contract, like that was from idea to launch in just a bit over 2 weeks. And it's because Vlad was just pounding the table and saying, we got to get this done. And he's hired and also pays well for people that can actually get it done and get it done well. Like $5 million that they realized from revenue just from that, which was just a thought, 3 weeks before. It's incredible. So like Steve Q there, like he's amazing. Abhishek, like those type of guys, they're awesome. Jason Warnick, fantastic. But I don't see a 1-for-1 replacement with Vlad. So they'd still be a good company. I don't know that they would be a great company at that point. I think that there's times when leaders have been there long enough that they built up the culture long enough, and then there's a clear heir apparent. So this isn't what's happening, but I don't know if you saw Shyam Sankar, who is basically the number 2 guy at Palantir, is being considered for a role. If he were to go, I don't think it would slow down Palantir much. Like he would be a big loss. He's not the CEO for one. But like if it was reversed, if they recruited Karp for that role, I think Sankar would be almost as good. Like it'd take a little bit off the top as far as what they can reach. But yeah, Vlad is kind of not on the same level, I would say, but he's like an Elon Musk in that Elon has built an incredible team of very, very talented individuals, but there's only one Elon.
I agree.
So Isaacman, I don't know Shift 4 that well. Isaacman strikes me as a very unique person. I don't know that he's replaceable there, but I don't know how that'll play out. So what do you think? I know you already were here, but I didn't hear it.
Yeah, I did cover it. Right now it's a hold for me. I want to see out their investor day. That's what I'm waiting for. So that'll happen in February, and I can wait.
And I'm glad for continuity that he'll be there for that investor day. So that's helpful for investors. I'm not in for it's on my list of companies. It's very, very short. I'm not short any of these that I'd like to invest in at one point. So we'll have to see.
I think that the impact of him leaving has already happened.
Yeah.
I mean, from a sentiment standpoint.
Oh yeah.
People that were there for Jared are gone.
Yeah.
So, and honestly, I'm surprised by how, I thought it could have been more. But it's very much like a Toby Lucky, Harley type event where obviously he's been there for an extremely long time. So just it's like, having two twins, but it's also good. It's better whenever you have two twins. I'd rather just two great leaders at the company instead of one, So that's another thing too. But so I'm going to wait out till the investor day, get some clarity. And I don't think that the stock is going to see some real impactful things between those two periods. The only numbers that we're going to get between now and February is Q4 of 2024. Those numbers, like Jared Isaacman's going to be here the entire time. The numbers won't even be affected, and then I'll get to make a decision once I get a better understanding of their total addressable market.
Yeah, no, that makes sense. I mean, it's a great company. It's just a question of how less great is it without Isaacman? Obviously some, but like, we'll have to see.
Yeah, but usually it's a long-term. It's not like, oh, once he leaves, there's a new president on board and they are just sending nukes.
Yeah.
It's usually just slower growth and just less impressive.
Yeah, and probably a little bit less vision. Like usually the thing is with a founder-led company, I don't, there's some founder-led companies I'm not optimistic on. I'm not going to name names because we've rehashed that too many times. But most founders are naturally, they have to be visionary. They just are. And so usually they just continue to be visionary, throwing things out. The number two person is usually, more of an operator and an executor, because somebody needs to be there to do that and to hold that visionary person's feet to the ground and just say, hey, we're doing too much. We're doing it too fast. Things are going to break. Don't fly off to the moon just yet. We need to get you here on Earth and get you grounded. So, but yeah.
Didn't you get that feeling from Vlad? Like this dude is a hot air balloon and the entire company is just trying to pull him down because he like some of these slides were like, oh, we want to be the number one company in all of financial services. And like they were openly being like, well, we probably won't, it won't happen as fast as Vlad's saying it, but it'll probably be faster than how I'm saying it. And we usually are somewhere in the middle.
I think based on what they were saying, like Jason Warnick, the CFO, it feels like he was brought in to be the anchor for that company, because without an anchor, you can blow away and drift away. And so it's like, it's the best kind of anchor. And he I don't know, like I love hearing him communicate because he does it in just such a different way. And he's like, here's the raw numbers, here's the TAM, here's how we can execute on that. Here's all these good things that we're seeing. I think Gallagher as well, like he's one of those anchors as well that just helps hold things down. But
he was the most impressive part about that thing. I think honestly, whenever he was talking, I was so certain that they had like a talent advantage here.
They do,
like a real advantage in their business because Dan Gallagher was there. And
honestly, yes,
I was very impressed by him. Everything that he said was with like he knew his stuff, 100% certainty, and he knew how things were going to change going forward. And I would put my chips on him for sure.
Like the other thing, and this is like a small thing, a lot of business, Robinhood isn't to this point, but we talked about this from Miami, that they're not siloed. They're interconnected, and you see that in the way that they relate. Like you don't see that on the main stage, that they come over afterwards and they did a killer speech. So they're like fist bumping and like good job and whispering and just having a good time, enjoying one another. Relating like well to each other. It's a well functioning team that has each other's backs. That isn't just like, what, that's not my area, you deal with it. It's incredible. It doesn't happen in a normal business.
By the way, we were sitting right behind Vlad.
Yes. Like
Roy could have done this and touched Vlad.
Yeah.
And it's very funny because like as we're all talking with him, everyone is weirdly trying to get like a little bit of time with the C-suite executives. And it's a different feeling whenever he's talking to retail. He's like having a good time, and then Wall Street comes in, and then he's like working. It's like, I don't know. It's a different feeling. So we've even heard that from some of the people that are around. They're like, no, you can stay. We're just going to usher these people away.
I mean, like, there was the retail corner, and we weren't. I mean, it just kind of happened that way. And,
I didn't even mean it to happen that way.
I think we retailers asked, I don't know, probably 40% of the questions, 35%. And they were good questions. These weren't like the dumb questions you see on earnings calls for, say, technologies, like, when you going to do a dividend or, something stupid like that. So I was like, yay, retail, good job. And well, the craziest thing is like, Robinhood still is a heavy institution name. It is not a retail driven, but there's a
Mhm.
presence, and Vlad appreciates it, and he shows. So I appreciate that.
Yeah, no, I think the speed of innovation can only happen, and like this is why I still believe in like Shopify. It's like, okay,
Yeah,
well, if you take 4 steps every time your competitor takes one, what does that look like 3 years down the line? And then
yeah,
from your advantage 3 years down, like whenever I was first investing in Shopify, they were not a market leader. Okay, people didn't call them that. They called them like a what do you call it? Like a fast growing but secondary behind, sort of trying to catch up, right?
yeah, yeah.
And now they're looked at as, oh, the largest player, and there's other people trying to catch you. Well, I just see that a lot with Robinhood, where I'm like, if this just continues for 5 more years, if this continues for 10 more years,
Yeah.
where
I
are we going to be?
I have no like this is my Robinhood position is much smaller than my Palantir position, but I kind of think of it in the same way where I'm like I'll keep buying actually even at this level very slowly, honestly. I prefer in the 30s. But what I have, like I'm comfortable with it. Like I'm not worried about it being up or down like that. I've got a very good feel of what that company is right now, and as long as they continue to execute, which I don't see them not doing with Vlad there, uh, like that's easy to rest on and sleep on. Like even though it's very cyclical, there is going to be a bear market. There's going to be a time when crypto is just doing terrible. There's going to be a time when something doesn't go right that they launch. Maybe credit cards will be that. It's like that's okay. I love that culture, that drive, that vision, that execution. So I can invest.
I asked Vlad for a card, by the way. I was like, can you just send me a card? Like,
Oh yeah.
I just need like something to put in the background, please.
What what did he say?
He said we could do something, but also like he says that, but if I don't tell, like if it's not heard by a team member, it doesn't get
Yeah.
done,
Yeah.
because like that's the thing, right? Is like you need not only them to hear it, but it needs to be CC'd with a bunch of other people who can actually spend their time doing that.
Yeah, I am so excited, and oh, you know who's going to be ticked, by the way? So if you guys don't know, they announced that every single attendee that was on the list that had not gotten the card would get that. So,
Well,
but
not everyone.
well, you're right, not you.
Yeah.
You're not on the list. You're in the wrong country. So, but you know who was there last time that wasn't this time that specifically mentioned he wanted that card? Porter Collins.
Yes. Yeah,
Yeah.
and why didn't he go, like his buddy's gonna go back and gonna have it, and he's
Oh
not.
yeah, yeah. No, he's gonna be like, "Hey, I got the card," and these are, by the way, not the gold, solid gold cards. They're the actual regular, but nothing's regular about it card. And so, yeah, I'm excited about it. But yeah, Porter is gonna be like, "Oh man, come on."
Gee, what's your first name? If this is Gary Tan listening in, I will. Which actually Gary did, because you can see on X Spaces whenever people join. Because I do know that Gary Tan, the actual Gary Tan, does listen to some retail analysts from time to time, and he did join a Space X or an X Spaces that I was in, but only for a little bit. Man, honestly, X Spaces, SpaceX, enough
Yeah,
with all these names that are all the same.
XAI, Xi, yeah.
It's Gary with 2 R's anyway, so I know that it's not you.
Ah,
Not Gary. That's fine. Nobody cares about SoFi anymore. No, it's just they haven't put out a piece of news. I mean, so they did end up putting out like other things today that we haven't ended up talking about, like the investments into SpaceX that you could buy directly. However, Roy, did you see the disclosures on this?
no.
So one, you have to be an accredited investor, assumingly, right? But then in the disclosure, it says they'll be accepting 99 people, 99 investments.
99.
Not a lot of investment.
Boy, that's a nothing burger then,
Right.
unless they scale it.
And
But
then
yeah,
so what I'm going to assume is that they're going to be accepting the ones with the largest amounts of assets under management. So it's probably not going to be a lot of $25,000 investments, but it still is not much at all.
No.
And SoFi's take rate, they said, could be anywhere between 20% and 50% of the 6% take, but still, it's nothing.
Yeah, no. It's not really exciting. That doesn't mean SoFi's a bad company. It doesn't have that same level of intensity. And normally they'll launch something, just out of the blue. Like the lending platform is amazing. That was a great launch. And it's going to be a great product for them, for the foreseeable future. But we'll have to see.
Are you, by the way, with Robinhood, are you buying shares here?
As I get cash, so my cash level is about where I want it to be. So I'm not buying anything aggressively. I did buy more PayPal just because I'm like, hey, they're going to have a great Cyber 5, and they did. And when Alex Chris announced that, I was like, yep, there we go. That's awesome. And plus it's undervalued, honestly. Robinhood is not undervalued. I don't know if it'd be overvalued. It's probably a bit overvalued, but it's pricey for a reason. In January, when I take some profits off a certain name that won't be named, I'm going to spread that out. It's not going to go in one company, but part of that will go into Robinhood. And I have no problem doing that. Like even at 40, 42, 43, I'll buy some HIMS, even though HIMS is not cheap either. HIMS is up there. I have enough SoFi. I have it's close to 20% SoFi. So I'm like, I'm good there. But yeah, I could use some more Robinhood. Nubank probably too.
I just saw Tevis just joined us in Nubank.
Oh yeah. Nice. He's
Isn't
been
that crazy?
thinking about it. That's actually the one silver lining of Nubank is, a lot of people realized how great that company is, and they felt like they missed it. And here it's retracing, and it's like, hey, this is another opportunity. It could keep falling down. It could be dead money for a while. There are some real reasons why it's selling off. It's not just the market being stupid, but it's a phenomenal company. So are you adding it all?
I've not added yet. I may, but not yet. Because the market is turning around doesn't mean that I think that the impacts on interest rates are going to change at all. I have not trimmed at all. Like that's the thing too. It's not a starter position for me. So if it turns around and I end up not getting more into it, I don't care.
Yeah. My Nubank position was tiny. It's still small. It's under 5%, but it was I don't know, 1 or 2% before. I think 2%. So I more than doubled it. I'm happy to have done so. I don't mind continuing to add as it falls. I'd like to get it to at least 5%. The other company that you don't talk about much on here, but that you own is Tesla. I ended up buying a share in the 300s for Tesla when I was talking to Amit. Just one. Do you know why I bought one?
No. It's
to get over the stupid psychological hump. I was buying
being able to buy.
Yeah. So I was buying heavily, 150, 160, 180, under 200, less aggressively, but I really stopped buying at 220, and I should have just kept adding. It's expensive. I don't want to add a lot. I will buy some, in the new year slowly. It's really expensive, but that's another company that I think is going to be phenomenal over the next decade. It may be dead money. It's probably going to come back down. It'll probably retrace. It's going to be very volatile. But my Tesla position is 5% of my portfolio, and it needs to be higher. So I decided to buy just one share. So I've done it once. And it's like anything. You do it once, it's easier to do it the second time. And, even when something seems and feels expensive, especially given the psychology of the stock market, where it's it was just, 180 6 months ago or whatever. True, but that happens with a lot of stocks, especially phenomenal companies where, you could have said that with Robinhood at $30 and been like, you know what, $30 is too expensive. I'm not buying anything. I bought in the 30s.
It's the same thing with SoFi. I feel like a lot of people think that this is a hard price to buy it at, but
it's not.
It would probably be similar to like this price is probably similar to buying Palantir at the late 20s. It's like, yeah, it looked expensive comparatively to where it was, but
Oh, yeah.
to where it could be priced,
Yeah.
and it's not, you know?
Yeah. And honestly, like SoFi is one of those. If I didn't have a massive position of it, I'd be happy to add at 16 or 15 or whatever. I think it's going to have a really good year.
Matt Flo, I don't know why he's saying this. No, I think out of all the fintechs that we've been covering lately, there's been sort of negative press on almost all of them, except for Robinhood and SoFi.
Hmm.
Those ones have had a lot of like genuine tailwinds.
Oh, yeah.
And the problem with SoFi that I find people sort of have a hard time judging is honestly maybe they should do monthly metrics similarly to the way that Robinhood does, because with Robinhood you can track markets that go up and easily adjust your prices to where the flow is going to. But on loan selling sides and the marketplace for like capital markets, it's very hard, especially for retail, to track those activities for how engaged those types of markets are. So if SoFi had a similar sort of chart, the way that Robinhood or Coinbase has for crypto, and they had for capital market activity, I think people would be a lot more bullish on SoFi and have much larger price swings.
Maybe. Like Robinhood pretty much has to do that just because they don't do guidance. Otherwise, it'd be hard to hold for a lot of institutions. Um, yeah, it would be a benefit, I think. But they already give, I think, maybe a little bit too conservative guidance, but they give really good guidance. Like it's very clear on what they're expecting and why. So maybe.
Yeah, I am, and always this will be always me. If a company gives a lot of information, I'll ask for more.
Even
You know?
Nubank.
Even Nubank didn't show off their product numbers this quarter. I'm pissed.
Oh yeah, I
So
didn't notice that. So
they do a very weird thing where they release a spreadsheet similar to Block. Thank you for this. They give off all their numbers, everything like this. But then in their product numbers, they only show off Brazilian numbers. Do not include Mexico and Colombia. But
okay.
then in the slides, they used to do full company numbers. So I'd have to go to the slides to get the full company numbers. And this quarter, they did not have that slide. They had 150 other slides, but not that slide.
It was so much information. I didn't notice what was missing. It's just like every time that they release that, I'm just like, dude, I need to like block out 2.5, 3, 4 hours at time just to go through it.
That's why their earnings calls are 2 hours long, because they're like, we're going to need a minute here.
Honestly, I'll be honest. I never have listened to an earnings call of theirs. I just wait for the transcript.
Yeah.
I read much faster. I can control F where I'm like, hey, that's interesting. Where else is that in here? It's just too long for me, honestly. I love the information. You probably love the 2 hours.
I mean,
It's long.
it's long. After a while, I definitely prefer the control F and just find what I'm looking for. But yeah, I listen to it also because I'm streaming it, and like usually there gets to a point where I'm like, all right, I got the gist. I'd love to switch over to this company's, but I'm like, I am recording something that is going to be published that people sometimes want to go back and look back to. So I'm like, I don't want it to just be a live stream of me listening to 4 different calls.
No.
So, and it's always hard, like whenever it's a company that like I really like, but I'm like, but it's not fintech, so I'm watching, a firm's numbers, which is cool, but Tesla is on in the other like, on another call. So I'm like,
It's a whole another level.
yeah.
Max Levchin is great and all, but he's no Elon Musk.
Which, by the way, that company, although I'm not currently buying them, and it could do well, but I just not even sure if I believe in the product category, let alone do I not believe that banks are going to dominate. I have zero reason to believe that banks are not going to dominate buy now, pay later.
Oh yeah.
So
yeah. Did you see Sezzle? Have you tracked their stock and company?
I I've seen their stock over the last little bit. I know
Yeah.
of Sezzle, but I'm not going through their financials.
So like last year, last November, going through the mall, and I was seeing Klarna everywhere, just like everywhere. And some Affirm. I think I saw PayPal once. And I saw Sezzle, and I'm like, huh, what's that? And I looked it up. I'm like, oh yeah, that's right.
Or
They're
Zip.
another.
You see that
'Cause
one on
I knew
commercial a
that,
lot
like I
too.
knew I'd mentioned I've heard of them before, but I didn't even know they're a publicly traded company.
Mhm.
And I was like, wow, stocks seems like it's doing okay. Interesting space, but I'm like, buy now, pay later, I just don't believe in as a standalone category. And I could be completely wrong. But had I just like YOLO'd and Sezzle, my goodness, I'm glad I didn't. Though I prefer to be in companies that I believe in. I can sleep better at night. I'm not afraid to like just take a like if it doubles, I'm like, all right, I'm out just because I don't trust it. Versus quality companies, you just let your winners run.
And this is honestly like some of the most important lessons I've ever learned is like investing is a single player game.
Mhm.
Like, and a lot of people play this game like it has a leaderboard. And
Oh yeah,
and most of those people that play that way end up being very low on that list because they're worried about where they track versus other people rather than worrying about how you actually win the game, which is beating the market.
yeah.
And
Yep. That's it.
so a lot of people see companies and they miss out. They go, oh, Sezzle, oh, Dave, oh, all these shit penny companies that have done, exceptionally well over the last year. And they're like, how could I have picked those? It's like, like, man, those are random blind shot. You never would have picked those.
No,
Okay. You would
I
have
would
picked,
never.
you would
Yeah.
have picked 10 other companies that went nowhere trying to find those penny companies that did pop off.
Yeah.
Okay. So 0% do I feel any sort of FOMO for missing those because I wasn't tracking them. If I was staring at them and following them every day and listening to all the earnings calls and I decided not to pull the trigger, then I'd be like, all right, I probably should have known better.
Yeah.
But I'm not seeing that.
Yeah, and that's my goal too. Is just if I can beat the market on a consistent basis, and at this point, like I'm so far ahead of the market, yes, it's been answered. Like first couple of years of personal investing, it's like, well, maybe not. 2022 was a big wake up call, and there will be years where I don't like that. But the long game is, can you beat it over the long game? Not over
Yes.
1 year, not over 1 month. You don't have to beat the Chris Patels of the universe or the guy that supposedly finds 10x plays every single month.
It
That
doesn't tell
never
you
takes
when
a
he
loss.
buys them, by the way. I see all these people that come out.
Oh,
I even search their Twitter. This is the best, eh? You ever see these people that go, oh, I bought Sezzle at this price. And so
yeah,
I'll go to their account, I'll search Sezzle. They've never mentioned it before in their life. I'm like, wow, this has been amazing for you.
yeah. Maybe
And
they
you know what
did.
you should do? Even if they do own it, who cares? This
Yeah,
is your own life. Just imagine they have never owned it.
yeah. It doesn't affect me at all. It's like,
It
hey,
doesn't.
good for them. Congratulations. I didn't believe in it. I still don't believe in it, honestly.
Yeah,
So,
I don't know. I think that there is, especially in fintech right now, and maybe Trump changes this, but even from the sounds of it, he sounds like he's deregulating everything and
yeah.
potentially adding more regulation to some of these financial products. So I wouldn't be so safe just in this area if he's talking about 10% interest rates on credit cards. Early wage access, concerning. Buy now, pay later, concerning. Credit
Yes.
cards, concerning. I would be a little bit cautious because what is potentially going to be a black swan event is not such a black. We talked about gray swan events earlier. That's a gray swan event. There are flashing signs in the air or in the distance, and they could appear closer than they seem.
Good take.
That's all. I'm not even saying that like I'm not shorting them. I'm just saying like have a little bit of caution. That's all. But is there anything else that we want to cover? This is an hour and 10-minute long, 30-minute show.
If it wasn't this long, I'd say. I mean, did you? Well, let me ask you this: did you listen to Jamie Miller's PayPal note from yesterday?
No.
It's pretty interesting. It's worth listening to. I'll say that. I can show you.
I've been
One
wanting
more.
to do an update on PayPal, so that'd be nice.
Oh yeah. Maybe we'll save that. But like, there's Black Friday numbers were really really good. She released. Well, I'll share one thing. Like there was multiple things, but here is this one. So they were talking about newest integrations and this isn't their like Fastlane product. This is like their actual PayPal button, PayPal complete payments as well. So only 5% of US merchants that use PayPal have the full modern integration and customer experience. And they get a 400 basis points of uplift in conversion. And the reason why, like, one of the most shocking part of this, though, was that they mentioned that it actually performs better on mobile platforms. And I noticed this. This is from Adobe Analytics, where they published their Black Friday, Cyber Monday numbers. And last year, I mean, actually, that's a conversion rate. Wrong slide. There we go. Mobile revenue. There's a different slide. I should have put it here. Oh yeah, you're right here. So you see the 50% mark. Mobile surpassed 50% for the first time last year. And, no big deal. I didn't see like glaring headlines or anything like that. I mean, there were some articles. It's continuing to climb, as it will. And so usually that's a much worse conversion experience than desktop. We can see it right here, mobile in purple, desktop in blue. If I got the colors wrong, it's because I'm colorblind. But that conversion rate is substantially lower than desktop. There's some reasons for that. But with PayPal saying, hey, this modern integration, it's good for what ails you. As mobile continues to grow in percent, it's more and more important that people capture that conversion uplift. And PayPal has a product that helps them do that. So I was like, that's one of those little things where it's like so good. And if that was it about PayPal, I'd be like, oh yeah, that's nice. It's like, no, they're not trying to do too much. I mean, they have like 25,000 people there to help do a lot of the different things that they're working on. But they have a lot of little things. And this, I don't think, is so little, that are just really smart, really well done, and will, little bit by little bit. It's like the opposite of death of 1,000 paper cuts. They're just like raking in like a little bit here, a little bit there, a little bit there. I thought that was so cool.
Healing of 1,000 band-aids is PayPal's.
There we go. Yeah.
PayPal's business strategy. Yeah,
it's
like
that, honestly. Like, they were bleeding all over the place under Dan Schulman, and we saw that picture of them entering the S&P 500 there, or no, the Nasdaq rather, on the wall from back in their day. They weren't the same company, and Alex Chris has turned them around.
Vlad closed the market on the day that we were there.
That's cool.
Yeah.
Took away the buy button again. Sorry, Vlad. Please invite me to the next one.
That is funny. No, but they're keeping it open 24/5. So
yeah,
really, he's just taking it away for all non-Robinhood users. He's doing the opposite.
Well, that New York Times headline, and I've heard it mentioned this way, a couple of times. It's like Robinhood era. Like, that's when your company is a one of a kind. It is a unicorn when they think of your company as an era, as far as like in the financial markets, and that time and time again people chase and follow you, including the Nasdaq. So I'm so very impressed
to have a friend like Vlad, where you can just ask him. We like Amit and I were sitting there asking him about his sort of life arc of just going from like living in a basement at some point to being an absolute billionaire celebrity, to having moments in his life where it feels like it's all being stripped away and he's sitting in court for a single split-minute decision that he, like, just all the highs and lows that he's had. It's just like life on margin is what it feels like for him. It's just
that's awesome.
But
it's fitting.
So cool. Cool to be able to learn from him. And yeah.
And that he's open to that. Like, he's not, a lot of people, when they made it, whether it's a monetary figure or a certain level of success, it's like, hey, I don't have time for people that can't, that are not at the same level or anywhere close. And we're not. Like, you're incredible. Amit's incredible. I'm like, down further. But, Vlad could just be like, I'm not giving the time of day to anybody. And it'd be like, yeah, I get it, but he's not like that.
Well, I wanted to ask him, but it seemed like, this was like a regular. Obviously, it might be just in the moment that he's on a. I don't know, but like, I'm like, do you ever just like sit down and have a good cry? Like, do you ever just think back to where you are in life and just pat yourself on the back? Like, come on. But no, it seems like he is just full focus. Like he's kind of envisioned this as his life for quite a while.
Yeah.
Yeah,
Anyway.
Oh, sorry. Go ahead.
I was going to say some people, even in the comments, can't stand him. That's okay. People can make their own choices. I have to say, after meeting him, getting to know him a little bit, more than a little bit, honestly, from Miami, because it's over 4 days. Yeah, he's very likable, very genuine. But to each his own. We don't all have to like the same people. We don't all have to like the same companies. So
that's true. Someone in the chat keeps asking about what I think about SoFi in the short term. I think that SoFi has a lot of tailwinds in the short term.
Yes.
If markets keep rising and money is looking to make money, then SoFi is going to benefit greatly because they have the products that institutions are looking for.
Yeah,
so
I'm wearing SoFi blue, so that answers it too. I mean,
yeah, there you go. But in terms of what I think for share price, I don't have a lot of expectations. I just don't do that. I don't have a lot of expectations for any of the companies that I hold in the short term. What I think people are asking though is, do I think it's going back down to $6? No. I think the company is fundamentally changed after the loan platform business. And now, as long as there's activity for that in institutional money, that they will benefit greatly. And currently there is. We're not seeing any slowdown there.
Yeah, could be a pullback. Could be a broad market pullback. It gets caught up in. It would be. I mean, it's possible it falls into single digits, but if it does, I don't think it's going to go far or long. It's hard to doubt SoFi right now. It just is.
Yeah. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. If you want more content, make sure you subscribe, but also subscribe to the great and powerful Roy at @cross_roads. Thank you all so much for watching. I already said this. Bye.
Bye for now.